Hi friends, my name is krishnaakumalla. Welcome back to my YouTube channel. We have already discussed about straight line method and we also discussed diminishing balances method in our previous video. Today we are going to work on one illustration. Basically that illustration talks about straight line method, and we are going to talk about another illustration on diminishing balances method as well, probably next video. And then we move on to the third method of calculating. Okay, without wasting much time, let us get into the problem. Okay guys, let us read the problem. Jain brothers acquired a mission on 1st July 2018 at a cost of 14 lakhs. Jain brothers, they acquired a mission at 14 lakhs and spent 1 lakh on its installation. So installation expenses has to be capitalized. It has to be added to the machinery account or asset account. What we discussed in cost of while understanding cost of acquisition, right? So when we are calculating the cost of acquisition, cost of purchase plus installation charges have to be included in the value of the asset. Then the firm writes off depreciation at 10% per annum on original cost every year. This is very important. How do I know this is straight line method? When they say depreciation has to be calculated on original cost is nothing but the cost at which the asset was purchased. So that means same 10% has to be calculated on the original cost at the cost of purchase. Suppose I purchased an asset for 1 lakh and every year I need to start calculating 10% depreciation on 1 lakh only. Unlike our diminishing balances method. So 1 lakh into 10 by 100, first year. Second year, 1 lakh into 10 by 100. Like that, we need to calculate. That means what? We are calculating depreciation on the original cost. This is called original cost. So, original cost method or straight line method are one and the same. The books are closed on 31st December every year. So, every year they are closing the books on 31st December. That is what they said. And they are asking us to show the machinery account and depreciation account for the years 2018 and 2019. So what we are going to do here is, I can straight away go ahead and tell you the machinery account and depreciation, but I don't want to do that. What I'm going to do is, let us prepare the journal entries first, and then while discussing about the journal entries, let us also understand how to post them into respective ledgers. Okay, right. So what did we do first? On 1st July 2018, we purchased an asset for 14 lakhs. 14 lakhs asset when we purchase, what entry we put? Asset is purchased and installation is 1 lakh. So 14 lakhs plus 1 lakh. So total we spent 15 lakhs. So let us first talk about 14 lakhs we purchased an asset. So when we purchase a machinery, it is an asset. So machinery account debit 14 lakhs, bank account. So we would have paid this amount, the supplier, right? Machinery account is debited. Second, we also paid 1 lakh installation charges. Installation charges, what did I say previously? Installation charges have to be added to the machinery account because installation charges have to be capitalized. Since installation charges are being capitalized, what account we need to debit for machinery account? Debit 1 lakh. For this also, bank account 1 lakh. These are the two entries we need, right? Getting my point? So now, let us say when we are preparing machinery account, where are we going to post these transactions? Machinery account is an asset. So assets are debit balances. So we debited asset account here. So debit side of the machinery account, this is debit side and this is credit side. Machinery account debited, hence debit side, bank 14 lakhs. Here to bank 14 lakhs. To bank 1 lakh, bank lakh. What is these two entries? These two entries are nothing but one is for purchasing an asset, other one is for installation of the machine. So these two we posted on 1st July 2018. That is very important. When did we purchase this asset? 1st July 2000. So please remember this date. Then this year, once the asset is purchased on 1st July, assumption is this has been installed and started using from 1st July. Let us assume like. Now, what we need to do, we need to calculate the depreciation. How do we calculate the depreciation? Total 15 lakhs is the asset value. 14 lakhs plus 1 lakh. 15 lakhs is the asset value in 10%. This is what they said, 10% per annum on original cost. So original cost is 15 lakhs into 10%, 10 by 100. Can we calculate straight away 10%? We can calculate. But if I calculate 15 lakhs into 10 by 100, that will be, the depreciation would be calculated for 1 year. But asset is purchased on 1st July. Since it is purchased on 1st July, August, September, October, November, December. The 6 months we used in 2018. In the year 2018, this asset was used only for 6 months, right? So we need to calculate depreciation 10 by 100 into 6 by 12. 15 lakhs into 10 by 100 into 6 by 12. Why are we putting 6 by 12? Because this asset is not used for full year in 2018. We used only for 6 months. Since we used it for 6 months, we need to put 6 by 12. 12 is for full year, 12 months, and we used it for 6 months, so 6 by 12. So when we calculate like this, how much it will come? It will come to 75,000. 75,000 is the depreciation for half year, 6 months. See, for that, what entry we, depreciation is loss for us. So depreciation account, debit 75,000. All expenses and losses to be debited. So depreciation account debited. To that extent, machinery account has to be credited. So machinery account credit 75,000. I already told you there is a different way of writing this entry. We can write credit to machinery account, or we can credit to accumulated depreciation account, or we can credit to provision for depreciation account. This is what I explained in my previous video while explaining about the journal entries. Please refer the journal entries video. Okay, depreciation account we debited and machinery account we created 75,000. Now we are preparing the machinery account. Machinery account, what we have done here, credited. So credit side on 31st December, by depreciation we need to put, and we need to put 75,000. And when we are preparing depreciation account is debited. So debit side we need to put machinery, to machinery 75,000. Clear? So this is the entry to be posted. Once this is posted, what we need to do by end of the month, this depreciation has to be transferred to P&L account. Transferred to P&L account. What entry we write? P&L account debit 75,000. Depreciation account 75,000. So we transferred this amount to depreciation. Why P&L account is debited? Depreciation is lost to us. Expenses and losses to be debited in P&L account. Hence we debited P&L account. P&L account debited 75,000. Already depreciation was debited. Now I am crediting because I am transferring that. So P&L account debit to depreciation account 75,000. That's all is the entry. So let us understand how do we put. Depreciation account credited. So credit side on 31st December 2018 by P&L account 75,000. So with that 75,000, that year end we closed our depreciation account. Books are the depreciation account has been closed. Balanced, I can say. Machinery account we balance. Machinery account debit side, what is the total? 15 lakhs. Why are we balancing now? We are balancing because 31st December is the year end close. Every year end close we need to balance our ledger and ensure that my balances are being carried forward to next year. So that is the reason we are totaling this 14 lakhs plus 15 lakhs in debit side, and same 15 lakhs I kept here, and 75,000 when I take out, I have a balance of 14 lakhs 25,000 in my machinery account. So by balance carried down on 31st March, and next year 2019 January 1st I will put that as to balance brought down for 14 lakhs 25,000. Clear? Now next year what we are supposed to do? We are supposed to calculate in 2019, we are supposed to calculate the depreciation. How many months we calculate depreciation? 2018, we calculated for 6 months. Why 6 months? Because the asset used for only 6 months in 2018. Hence, we calculated depreciation for 6 months. But in 2018, we used this asset for whole year. So since this asset is used for whole year, the depreciation has to be calculated on the original cost. Original cost is how much? 15 lakhs. 15 lakhs into 10 by 100. Can we put 6 by 12 or something like that? No. Why? Because we are going to calculate the depreciation for full year. Whole year, if I calculate, my depreciation is going to be 1,50,000. Whole year, my depreciation is going to be 1,50,000. So what entry we write for depreciation next year? Depreciation account is a loss. Depreciation account debit 1,50,000 and 2 machinery account 1,50,000. This is the entry we post. Machinery account is created. So credit side by depreciation 1,50,000. Similarly, depreciation account is debited. So debit side in machinery account we need to put and 1,50,000 with. Why? Because we are preparing this for 2019. 2019. So depreciation account is debited. So I'm debit side. I kept 2 machinery account 1,50,000. After writing this entry, what I'm supposed to do? This depreciation has to be transferred to profit and loss account. How do I transfer profit and loss account? Debit 1,50,000 depreciation account. I already explained why depreciation account is created, why P&L account is debited. Right? P&L account is debited because depreciation is loss. And depreciation account we created because already depreciation account was in debit. Now I'm transferring to P&L account, hence I'm creating depreciation. That's all. So now what we are supposed to do in depreciation account by P&L account, I need to put 1,50,000. So depreciation account is also posted. Now let us balance the asset account. How do I balance? Debit side I have total of 14,25,000. Let us put the same total here and take out 1,50,000. Then you have a balance of 12,75,000. So by balance carried down and 2 balance brought down. For 2020, it will become 2 balance brought down to the extent of 12,75,000. Whereas in depreciation account, we cannot carry forward that because it is an expenditure. Hence, we are transferring to P&L account and closing the depreciation account. Well, so this is how the ledgers and journal entries have to be prepared for this problem in straight line method. Clear? That's all for the day. Thank you so much. Bye-bye.